Hey guys, TommyBryson here, and how can you go ahead and use a retirement account to buy real estate and avoid paying taxes? Now, I know you didn't learn this in college or, for example, in high school, because guess what? Neither did I. No one told me this. And by the way, I graduated with a bachelor's degree in accounting. Surprisingly, okay? I don't know how no one told me any of this stuff, but basically, it's very important, and it's also very possible to buy real estate with your retirement account and avoid paying taxes on it indefinitely, okay? That's how cool this stuff really is. And if you guys are new here, I post videos every single day. Make sure to also subscribe and hit the bell so you're notified. On top of that, also destroying the like button. Now, the first thing is this, guys, okay? Tell me, what exactly is a self-directed retirement account? Now, obviously, an IRA is an individual retirement account. Retirement accounts give us the benefit to go ahead and invest our money and grow it tax-free, so then eventually take that money out. Now, for example, if you have a traditional IRA or a 401k, usually you'll pay taxes then when you take the money out. If you have a Roth option, usually you will not pay taxes whatsoever, because basically you are investing with after-tax income and not pre-tax income, which is actually pretty cool. But that's a whole conversation for another video. But in this case, okay guys, the whole idea is that when you have a self-directed retirement account, it gives you the benefits to invest into investment vehicles to produce for you income. And in this case, that's going to be real estate. But if it's not self-directed, usually you can only invest into stocks, bonds, mutual funds, CDs, and so on. But having a self-directed one gives you a lot more benefit. And by the way, you can do this if you are self-employed, have your own business, or for example, even are employed. So keep that in mind also. And by the way, you could buy a lot more than real estate. For example, gold, precious metals, Bitcoin, don't recommend it. Also debt, for example, make loans, or for example, buy liens on properties and so on. There's a lot of things you can actually go ahead, and also businesses, you can actually go ahead and invest with a self-directed IRA, not just stocks and bonds and CDs and mutual funds, okay? But the idea is that, hey, when you're making these investments, you need to know what you're doing, because basically if you don't, you could lose your retirement, okay? And that is not what you want. So keep that in mind, and that's why today we're talking about real estate, a very safe investment if you know exactly what you're doing, okay? So that is the whole idea and the whole concept here. We're going to need a self-directed retirement account. That is basically it. And by the way, you can always convert your 401k, traditional IRA, a Roth IRA into self-directed options, and also a self-directed SEP for self-employed people out there, okay? So keep that in mind. All the options are open. All you need is the how-to, and I'm gonna give you guys that right now in this video. Now, once you have a self-directed retirement account, here is what you need to know, okay? Whenever you go to a bank, and usually, for example, personal person, right? I go to a bank and I say, hey, I want a mortgage. They give me a recourse loan. Now, a recourse loan basically means, hey, Tommy, if you don't pay us, we're gonna go ahead, take the property, and also go after your personal assets. That sucks. But when you have a self-directed retirement account, you and that account are separate entities. So basically, when you go to the bank, they have to give you a non-recourse loan, because basically they cannot go after the assets of the IRA. That's the cool thing there. So basically, when they give you that loan, the only collateral is going to be the actual property, which usually means higher risk for the banks. So you have to keep that in mind, okay? Higher risk usually means more expensive and higher down payment, which I will break down later on in the video. But they're basically going to give us a non-recourse loan. Pretty cool stuff, okay? So if anything goes wrong, guess what? They can't come after your personal assets, which is actually a pretty cool thing. But now, here are the cool benefits of actually investing with a self-directed IRA into real estate, okay? The cool thing is that basically, say for example, okay, you and I, well, not you and I, because it's basically self-directed, it's an IRA, it's not a partnership. In reality, let's say for example, I go ahead and I use my self-directed IRA to go ahead and buy me a property. Now that property costs around 200K, okay, 200K, and it gives me a rent around $1,000 every single month. Now, that rental income usually would be a profit and it would be taxable. But in this case, because it is with my self-directed IRA, a retirement account, guess what? I don't pay any taxes on it. And that is awesome. On top of that, now let's say I hold that investment property with my IRA for the next 20 years. Now, it went from being worth 200K to now being worth 400K. Guess what? If I sell that property and I keep that money in my IRA, I don't pay any capital gains tax at all whatsoever, which is also pretty awesome. Now, not just that, guys, okay? But basically, if you have, for example, a pre-tax account, obviously, in the end, you will pay taxes. But for example, if you have an after-tax account, for example, a Roth option, you will never, ever pay taxes. And that is the awesome thing about it, okay? Pre-tax, you pay taxes in the end, but guess what? After-tax, Roth options, you never pay taxes. That property, guess what? Capital gains, the rental income, I don't have to worry about it because I will never, ever pay taxes on it. And that's actually pretty awesome. Now, obviously, there are some disadvantages that you actually need to know. Because guess what, okay? If you have rental income coming in, you can't go ahead and use that money. Doesn't work like that. You have to keep that money in the IRA. It basically belongs to your IRA. It does not belong to you from a tax standpoint, okay? So basically, you have to keep that money in the IRA to be considered, hey, it's not going to be taxed because basically it's coming from investments that you actually made with your IRA accounts. Also, like I said before, okay, because basically the bank is taking on more risk, usually they're going to require a larger down payment. Tommy, how much? Like 10%? 20%? The answer is no. Usually around 40%, which is basically going to be a ton of money. Now also, although you will not be taxed on basically your investment activities, in reality, if you use leverage, you will get something called a UBIT tax. Basically, unrelated business income tax. Tommy, what the heck is that? Well, guess what? Let's say, for example, I go to the bank and I want to buy the same property, 200K, but I put down 50% and they put down 50%. Well, whatever income I make from that property, 50% of it is going to be taxed because basically 50% of it is coming from the leverage I created with the bank. But if that loan was basically fulfilled in full by my IRA, in reality, I will not pay taxes on it whatsoever because basically there is no leverage, there is no loan, there is no mortgage, which is basically the pretty cool thing. On top of that, keep in mind that all the expenses that come through that property are going to have to be charged to your IRA. So you have to keep some money open and available to cover, for example, expenses. Let's say, for example, the roof breaks down. Who's gonna pay it? Not you. Sorry. It has to be your IRA. So you have to keep money in there to actually go ahead and pay for expenses. So also keep that in mind. But obviously, the benefits outweigh the con. Your money gets to grow tax-free. On top of that, you get different investment vehicles from the standard stocks, bonds, mutual funds. By the way, I love those, but it's great to diversify into some different avenues. That way, you don't carry that much risk either. And again, remember your UBIT tax, okay? Unrelated business tax income. Keep that in mind because when you use leverage, you will have to pay taxes on the percentage you're actually leveraged, okay? So keep that in mind. By the way, if this sounds complicated, it's okay. They don't make it simple. I don't know why, but I have everything written down in the description. That way you know exactly what I'm talking about, okay? Just take it easy, step by step. You'll get this because basically it takes time. High school didn't teach you it. College didn't teach you it. You're learning it now on your own, and that's awesome. It shows a lot of initiative, and I'm proud of you, okay? Now, there is one more disadvantage, and it's basically that, hey, because the bank is taking on more risks, they're gonna charge you probably a higher interest rate. So you have to keep that in mind also. It's not gonna be the standard 2% like we're seeing now. No, they might charge you a few points higher because basically there is a lot more risk because basically the only collateral they have is your down payment in a way and the property. That's about it, okay? After that, they don't have anything else. So in a way, they have to limit their risk by basically charging you a little bit more interest. So keep that in mind when you're actually doing this. Now, lastly, guys, I want to go over the rules here because most likely, if you like this concept, your brain is already working. I'm basically saying, hey, Tommy, what if I buy a property and I live in it and I pay the rent? That way, in a way, it's in like just like, whoa. It's a lot of ideas, right? In reality, you know, the IRS is not stupid. They have a lot of rules in place to make sure that we don't take advantage of all these things. So although I'm having the ideas also, you gotta do the research that way you don't get in trouble, okay? So keep that in mind. Remember, okay, The rules are this, okay? This property has to be for investment purposes. You can't go ahead and live in it and then pay the rent, all this stuff. Usually, you have to do a lot more research on that, so keep that in mind. On top of that, even the furniture inside of that property cannot be personally yours. But how will they know? I don't know, but just keep that in mind also. On top of that, the property, you can't just go ahead and say, hey, I have a rental property. Let me go ahead and have my IRA buy the rental property for a premium. The answer is you can't do that either. Either you or your relative cannot own that rental property. And remember, it is a separate entity, meaning the income will be put in the IRA. The expenses will be put in the IRA. So will be taken from the IRA, not put inside the IRA, right? That's kind of weird. But the answer is it's a separate entity. So keep that in mind. It functions also as a separate entity. So keep all those factors in mind before you try to play the IRS and they play you with a huge tax bill and also penalties, okay? So keep all those factors in mind. And lastly, guys, here, remember, okay, this has to be with a self-directed IRA. You can convert your normal retirement accounts into self-directed IRAs if you actually want to. The options are actually there. Just talk to your financial advisor or, for example, your CPA. And remember, your CPA is not a financial advisor. I went to college. I graduated as an accountant, okay? I have a bachelor's degree in accounting. Guess what? They didn't teach me any of these outlooks when it comes to investing. All those CPAs and accountants are great for taxes. That does not mean they're great when it comes to investing. Keep that in mind. There's a professional for everything. If you don't want to do that, just make sure you do all your research before you actually go ahead and risk your money and put your retirement at risk. And by the way, remember guys, okay, whenever you're buying into real estate, the money is made in the buy. You want to buy for a discount. You want to hold in the long run, and you want to use that income to basically form a retirement account, okay? That is basically what you're doing here. I'll see you guys next time. Comment down below if you learned something here. If it's actually good and useful, comment down below, let me know. And as always, thanks for watching, guys. And by the way, it's going to be the last day with this on my face, okay? By the way, if you guys don't know what happened, I get into a fight with the like button. Everyone knows by this point, and that's why everyone on my channel smashes the like button. So go ahead and smash and destroy the like button for what it did to me. Okay? And also, if you guys are new here, make sure to also subscribe and hit the bell to get notified. And on top of that, if you want to text me or talk to me one-on-one, join my Patreon link down below or send me a DM on Instagram at TommyBryson. And before I go, if you want to watch a full video on how I invest my money, here's that video right here. By the way, for beginners, here's a video right here. And click my face for now. I'll see you guys tomorrow. Thanks for watching, and as always, peace.